The U.S. China trade war has had a significant spillover effect, hitting nations across the Pacific Rim, and that includes copper exporter Chile. Earlier, I spoke exclusively with Chilean Vice Minister of Trade, Rodrigo Yanez, about how the trade battle has taken a toll on his country's economy.
Our trade overall this year has decreased 9% compared to the last year, and half of our exports has to do with copper, and China is our main market for that. So the better the news, are good coming from that situation, the better our economy will perform. So in that sense, our trade policy also looks to work under, with this big word of diversification of markets, but also of our trade portfolio. We want to increase trade in services. We want to better engage with global value chains. That's a discussion that we want to have with Canada. And we look with very good eyes, of course, the fact that we have more certainty in markets given this agreement reached by the U.S. and China. And it explains also a lot of the downturn of our economy and our trade.
We have seen shifting in supply chains because of the tension. Even if it gets resolved, some of that may continue. Will that have a long-term effect, a structural change in how you trade with other nations?
Well, we've seen and followed, trade divestment and also the way how investments have moved. But since we have a trade agreement that covers nearly 83% of the global GDP, we have flexibility to move, and shift markets and move around and give more opportunities for our exporters if they need to supply country B instead of country A. So we have not seen a trade deviation from Chile to be that relevant, but we have seen that trend. We have followed, the way how these companies or factories are moving from China into Vietnam or other countries in Southeast Asia. But we have trade agreements, free trade agreements with them all. So we're able to respond by, supplying wherever, the value chains are moving. So that's something where we keep a very close eye.